Good morning, everyone. It is October 24th, 2022, and someone asked me to clarify uh, what I mean when I was talking about periods and what sort of patterns they might have throughout the day. And I've listed off just four things here, but there's a lot more that goes into it. So let's just get into this. And for background, 30-minute periods comes from market profile, and a lot of older traders, or I don't know, you can call it simpler traders, like to think of the market in terms of 30-minute periods. Now, there's nothing fancy about 30 minutes. However, that is how the older markets that's how the markets used to run. That's also when news releases are occurring during 30-minute intervals usually. So in general, the market tends to operate in 30-minute periods. So that's what we're talking about. So let's get into number one, reference points change. What do I mean by this? So right now we're in D period. So what would that be? The fourth period on the day from 11 to 11:30. So currently, people will likely be using the initial balance from 9:30 to 10:30, simply the high and low, so about 38.09 down to 37.50-ish.
Market data
They'll be
connection
using
lost.
that as sort of reference points. And if we go into a 5-minute chart, you can see what I mean.
Market
Let's
data
draw
connection
these
re-established.
initial balance extensions on here. There you go. You can see the midpoint holding up right now at 37.80 quarter. And if they were to think of where volatility might expand to, where price may expand to, it's likely going to be in 25% increments, just 0.25 increments on the way up and on the way down. So now, before the initial balance is created, traders might instead think of where the opening range is, and that's just the first 30 minutes of trading. The first 30 minutes. So there you go. Same thing, 25% increments. Great bids here, great bids here as well. And the high was already created, obviously. Before the 30 minutes are created, a lot of
Market
traders
data
will use the
connection
first
lost.
5 minutes of trading.
Market data
Right?
connection
And this
re-established.
just keeps going on and on. It's not really there's no real endpoint to it. And before the first 5 minutes is created, they'll think of the first 30 seconds, right? So my point being, sorry, it's a little bit of an elongated explanation, but my point being is that as the day goes on, the reference points that we're looking at, those change. So that'll be the first point that I make, is that reference points will change throughout the day. Secondly, news. Like I mentioned earlier, news tends to be released in 30-minute intervals. I think Janet Yellen is talking right now at 11 o'clock. Usually you have FOMC at 2 p.m. You have a lot of news. I think manufacturing news usually comes out around 8:30 pre-market. But these news events tend to usually occur at the top of these 30-minute periods. And these news events will cause increased volatility usually. Number three, EU markets, and this is a big one. So a lot of people talk about, oh, it's 12 o'clock, it's lunchtime. That's a bunch of baloney. The market runs off of algorithms, not some guy at his desk eating a ham sandwich. And algorithms don't stop for lunch, is what I'm getting at. It's not because it's lunchtime. It's because the European markets are closing. And with that, usually what you'll see is some sort of notable high or low made around that 11:30 mark. On Thursday, that's where we stopped. That's where we finally had that nice sell-off into the lows of the session. On Friday, I believe we had a ramp, which then sold off. Yeah, we ramped into '08 and sold off 10 or 15 points. Sometimes these can be significant highs and lows. 11:30, you can see that wick occur and then the bid come up. So usually if you see the market trending into 11:30, here's a great example. Trending down into 11:30, the market catches a bid, and that becomes a notable low for the day. So usually when you see a significant trend occurring, that's usually when you'll see a reversal in that trend. So that would be, apologies, 15 minutes before the euro, my alarm going off. So 11:30, 11:45, that's usually when volatility is going to settle down. You'll see the markets lose volume and it'll quiet down a bit. And with that, you should start thinking about levels that have traded throughout the day, what areas of interest you might have if we do just simply trade inside. Now, I believe a friend was telling me a statistic of if we do break the high, the 11:30, the E period high, if we break that, we will tend to break the high of the day. So maybe that's of note as well, right? For me personally, when I'm thinking of periods on the day, I like to think of A period as giving me an idea of potential volatility, areas of interest. B period lets me know if the trend up or down is going to continue or if we're going to stay inside of range. God, we always hope not. And then C period, I like to trade the most simply because now I know the volatility from A, I know how powerful the bulls or bears are behaving from B, and then C period lets me trade accordingly. D period I tend to not like just because that's when the Euro traders are either ramping it or dumping it. There's usually a trend that is established into E period, and then E period I also do not like to trade because that's when you usually have some sort of significant reversal as well as the the volume come down significantly, and then about F through L, I believe it is maybe it's F through K, is when you just have that low volume before what retail traders would call as power hour, but really that's usually the big boys adjusting their books before the close, and for the large part, if the day has been a smaller range, you'll likely be fine in terms of trading those last two periods on the day. However, if the range has been large through the day, we've traveled, up above settlement highs or below settlement lows, and people are caught offside. These guys who bought on margin, they're caught offside. There's a lot of movement that needs to occur. Just people need to clean up their books before the end of the day. So those last couple periods have the potential to be messy, although if it's a smaller session, it doesn't mean it's going to necessarily be messy. Hope that helps. 8-minute video on how periods work or how I think of them. It's I'm sure there are numerous other things that I could discuss and that other people might have noted from period to period. What I would find or what I would recommend, shit, can't make any sort of recommendation, but what I would personally do is I would figure out what period works best with my trading style and then push that. If you're a scalper, you're probably going to find the first three periods to be the best, if not just a period. If you're someone looking to hop on a trend, you can use B or C period to hop on that D period trend. If you're someone who likes to, if you're not so great at coming up with levels on your own, you can let the market show you levels from periods A through E, and then you can trade during F through L. It's a slower period, but your risk is a lot more defined. That tends to be how I trade Globex. Globex opens at 6 p.m., but I don't trade it until about 8 or 9 p.m. because I like to see what levels the market's respecting, which way it's sort of tilted, and then I trade from there. Anyway, that's all I got to say on periods for now. Hope that helps. Like, share, all that crap. That's all I have. Trade safe, you guys.